as we kind of move even more into the digital frontier, that need for that infrastructure is going to be so key. And I think that like blockchain really serves as one of the key technologies to be able to do that programmable money, but also have disparate parties that don't necessarily trust each other on one network. My name's Ryan Rugg. I'm head of digital assets for Citi's TTS business. We rolled out a platform called Citi Token Services, where we have a portfolio of solutions. Two of them are Citi Token Services for cash and Citi Token Services for trade. The cash management solution that we're working on is bringing liquidity to our corporate clients with always-on 24/7, 365 infrastructure. So the first locations we went live in are the US and Singapore, where corporates can move cash on holidays, weekends, currently when they have those off hours, adding that efficiency. And the other solution is Citi Token Services for trade. One of the key clients we're working with is Maersk. The trade business is very paper-ridden, has a lot of inefficiencies. So what we're doing for Maersk is pre-funding smart contracts with tokens. So when the ship passes through a canal and receives a set of services that were laid out in a smart contract, fuel goods, the money is released into the account. So really streamlining that process where typical letters of credit, bank guarantees were needed, not having those paper-ridden businesses. One of Citibank's strongest, core functionalities is the network. We're in 95 different countries, serving a multitude of different clients across everything from cap markets to payments to markets to security services. So with that, we started working a couple years ago on the regulated liability network with the Fed and a group of 12 banks to really reimagine the way that these systems work and that they're done. And the first focus of RLN is on payments, but with the focus of tokenizing other assets. Part of our core strategy is creating this network within digital assets. So working with, as I mentioned, multitude of banks, and then also bringing that internally. So bringing that functionality internally using tokens to add efficiencies in cash management. And we're doing it on an EVM compatible platform. So if we can tokenize cash, we'll be able to tokenize other assets. So like that holy grail of atomic settlement, DvP in the future for our clients. So where I sit within the organization, I'm in the payment side of it. So I definitely think that those inefficiencies in cross-border payment, transparency, speed will be achieved with tokens. I also think within cap markets, there's a lot of efficiencies that have been gained also with tokenizing various asset classes, such as, dark pools and areas like that are currently don't have a lot of transparency and efficiency into them. Throughout my career, I've tokenized everything from mortgages, repos, to IP, to you name it, real estate. So I think there's a lot of areas. But going back to that, the reason I started with Citi on the cash side that interested me so much is we always had to go back to traditional rails. That settlement piece was always missing. We always tokenized everything, but then we went back to traditional rails, where here I'm starting with the cash side of it, fiat side, to be able to add that efficiency and truly add that, DVP as I spoke about. So I think one of the key challenges in adopting blockchain technology is really right now is educating the different risk, legal, accounting, technical folks on the differences in this technology, as well as regulation. Citi is a highly regulated institute. We're not going to operate in the gray area. But I will say there's been an enhanced amount of work done in this space, and you're seeing more and more regulators taking an aggressive look at it in the sense of, issuing guidelines, if it's, MAS, if it's MiCA. So you're seeing more and more of these regulators taking an interest in it, which I think is hopeful, and I think that will drive institutional adoption. So thinking about the way that, our grandparents or we deal with money to future generations, a great example is my daughter. She's very motivated by Roblox and V-Bucks, dollars. So, I offer her $10 to do a chore, and the answer is no, because she can't convert it into her Roblox money. But offering her that, it's completely changed her motivation. So it'll be really interesting to see how these new generations evolve over time and their thought on how they use money. So I think currently what we're solving for, the pain points and the inefficiencies in our payment systems, having always on 24/7 programmable money adds huge advantages. But I also think as we kind of move even more into the digital frontier, that need for that infrastructure is going to be so key. And I think that like blockchain really serves as one of the key technologies to be able to do that programmable money, but also have disparate parties that don't necessarily trust each other on one network.